Hello traders, welcome to Smart Money. In today's video, we're going to cover 4 of the most important 3 candlestick patterns: the morning star, evening star, 3 white soldiers, and 3 black crows. But simply recognizing these patterns isn't enough. I'll show you how to combine them with price action to improve your trading accuracy and help you enter trades with more confidence. So, let's get started. Morning star candlestick pattern. First, let's talk about the morning star. The morning star is a bullish reversal pattern made up of 3 candlesticks. The first candle is a strong bearish candle, showing that sellers are in control. The second candle is an indecision candle, which tells us that buyers and sellers are evenly matched. The third candle is a strong bullish candle, confirming that buyers have taken control of the market. This pattern typically forms at the bottom of a downtrend, signaling that the market may be ready to reverse higher. The middle candle, known as the indecision candle, can be either green or red. The color doesn't matter. What matters is that it opens and closes near the same price, showing hesitation in the market. If this pattern forms at a major support level and the final bullish candle closes with above-average volume, it becomes a strong bullish signal and can provide an excellent buying opportunity. How to trade the morning star. Draw a line at the high of the third bullish candle. Enter a long position when the next candle breaks above that level. Place your stop loss below the support zone and set your profit target at the first resistance level. Example. Let's look at a real chart of Tata Communications. Here, the price reaches an important support area where a morning star pattern forms. This gives us 2 strong confirmations. Price is reacting from a key support zone. A morning star bullish reversal pattern has formed. For the trade, mark the high of the final bullish candle. Once the next candle breaks above that level, enter a long position. Keep your stop loss below the support area and target the first resistance level. Evening star candlestick pattern. Now let's move on to the evening star. The evening star is the exact opposite of the morning star and is a bearish reversal pattern made up of 3 candlesticks. The first candle is a strong bullish candle, showing that buyers are in control. The second candle is an indecision candle, indicating that buying momentum is fading and buyers and sellers are evenly matched. The third candle is a strong bearish candle, confirming that sellers have taken control and the market may be ready to move lower. The first candle represents a strong uptrend, while the indecision candle tells us that the balance of power between buyers and sellers has shifted, setting the stage for a potential bearish reversal. The third candle confirms that the sellers have taken control and overpowered the buyers. Once this pattern is complete, there's a strong probability that the price will move lower. If the evening star forms at a major resistance level, it can provide an excellent short-selling opportunity. How to trade the evening star. To enter the trade, draw a line at the low of the third candle. Enter a short position when the next candle breaks below that level. Place your stop loss above the resistance zone and set your profit target at the first support level. That's how you can trade the evening star candlestick pattern. 3 white soldiers pattern. Now let's move on to the third and one of the most important candlestick patterns, the 3 white soldiers. This pattern is also made up of 3 candlesticks, and all 3 are strong bullish green candles. The 3 white soldiers is a bullish reversal pattern. It usually appears after a downtrend, signaling that buyers have stepped in and the market may be ready to move higher. This pattern tells us that buyers are now in control, and there's a high probability that the price will continue rising. Each candle opens and closes slightly higher than the previous one. For example, the second candle opens and closes above the first candle. The third candle opens and closes above the second candle. Another key characteristic of this pattern is that all 3 candles are nearly the same size, showing strong and consistent buying pressure. If this pattern forms near an important support zone, it can offer a high probability buying opportunity. How to trade the 3 white soldiers. Draw a line at the high of the third candle. Enter a buy trade when the next candle breaks above that level. Place your stop loss below the support zone and use the first resistance level as your initial profit target. 3 black crows pattern. Now let's look at the fourth major candlestick pattern, the three black crows. This pattern is the exact opposite of the three white soldiers. It signals that the uptrend has likely ended and a new downtrend may be beginning. The pattern consists of three strong bearish red candles. Each candle opens and closes slightly lower than the previous one. The second candle opens and closes below the first candle. The third candle opens and closes below the second candle. Another important feature is that all three candles are approximately the same size, with small wicks, indicating strong and consistent selling pressure. If the three black crows pattern forms near a major resistance level, it can provide a strong short-selling opportunity. How to trade the three black crows. Draw a line at the low of the third candle. Enter a sell trade when the next candle breaks below that level. Place your stop loss above the resistance zone and set your profit target at the first support level. Now you've learned how to identify and trade all four of these powerful candlestick patterns. We've covered when to enter a trade, where to place your stop loss, when to take profits, and how to use these patterns with real chart examples to improve your trading decisions. I hope you're enjoying this trading series. Let us know your thoughts in the comments. We read every single one. If you have any questions or topics you'd like us to cover next, leave them in the comment section. If you found this video helpful, please hit the like button and subscribe to the channel so you don't miss any future videos in this series. Thanks for watching, and we'll see you in the next video.